Small and medium-sized enterprises, or SMEs, represent more than 90% of all businesses across Asia. But the contribution of SMEs to trade, jobs and economic growth is constrained by many factors, one of which is inadequate access to finance. A 2016 ADB survey showed that SMEs experience the highest rate of rejection, more than half of trade finance proposals sent to banks. Weak finances and a lack of collateral often prohibit SMEs from getting loans or financial support from banks. Supply chain finance is an innovative way to bring financing to SMEs. It offers a relatively low-risk, low-cost, efficient way of getting money to SME suppliers by leveraging the credit rating of large buyers in a supply chain. Here's how it works. A supplier delivers goods to its customer. The buyer inspects the goods, accepts them and commits to pay the supplier at a later date. The supplier typically has to wait anywhere between 30 to 180 days to be paid by the buyer. With supply chain finance, the supplier can approach the financial institution to request early payment so that he or she can use the money to grow their business. The buyer then pays the financial institution at an invoice due date. By financing at this stage in the supply chain, the financial institution is removing SME risk and at the same time providing timely finance to the SME. This approach lessens risk and brings additional finances to SMEs that may not have been considered bankable in the past. ADB enables financial institutions to grow supply chain finance programs by funding or just guaranteeing transactions for pre-approved buyers. Thanks to its AAA status, ADB enables financial institutions to release capital, to book new transactions, and can reach out to more SMEs in developing Asia. We support transactions involving suppliers in emerging markets in Asia for all kinds of industries. The supply chain finance program is now looking to move deeper into the supply chain by providing finance to SMEs at an earlier stage in the supply chain cycle, and even pre-export finance, where market gaps for support to SMEs are the greatest. Closing market gaps for SMEs is critical for the growth and job creation that reduces poverty. ADB can't do it alone, but working with partner banks to reduce market gaps and demonstrating to the broader market what is possible, it's already making a positive difference.